All right, we know that the SEC has it out for the crypto exchanges, first coming after Binance and then after Coinbase. Now, what's a little bit uncharacteristic about this is how openly and forcefully the CEOs of both of those companies have come out against that, with many advocates suggesting that what they're really talking about is an environment where regulations were never clearly laid out, and now we're in a situation of regulation by enforcement. Let's bring in Bruce Croxon, who's the co-founder of Round 13 Capital. Sort of different issues. I would say the Binance, those allegations sounded a lot more severe, and there were emails and evidence of malfeasance, whereas Coinbase, it was more, they were trading unregistered securities, and Coinbase is saying, allegedly, yeah. We've been trying to ask you, what's the format? What does it look like if we want to allow our users to trade some of these crypto tokens that are not Bitcoin, that are not
Correct.
Ethereum?
And I think that's good. And I think maybe for the purposes of the time we have, let's put Binance aside and just sort of say, if there's anything that they're doing that smells like FTX or resembles FTX, that could be a big problem, right? But they'll sort that out, and could be criminal. It's not really SEC only focused. SEC is there to protect U.S.-based investors, right, from being taken advantage of. So, let me just state right up front, anything that can be done to make sure that this industry, which, by the way, the horse has left the barn, and it is an industry, and it's going to be an industry for a very, very long time.
So
and we'll talk about that in a second. But, as far as the SEC goes, anything they can do to keep hucksters and charlatans and people peddling stuff that's not real off the market and out of, Joe investors' hands, I'm all for. The issue here is that the U.S. is kind of lagging the rest of the world in terms of its acceptance of trading in general. And, you just recently heard about Andreessen Horowitz going to the UK, which is much more investor-friendly for crypto. Hong Kong's markets are wide open. So as it stands now, the U.S. is missing out on new issuances because companies that are issuing them aren't clear about what the rules are. So we need to accelerate getting these rules baked so that the U.S. can participate in what I think is going to be a massive global market. It already is $1 trillion. Right?
So that's my question, is the U.S. does have the power, I think, to crush this industry with some of the moves that it's making. It's interesting that you see it kind of still flourishing without the support of the United States. I mean, the U.S. typically isn't in the habit of missing out on game-changing technology.
Right.
They're certainly doing it with respect to AI, maybe better than we're doing it here in Canada.
Yeah. So that's why I think it's a short-term blip on an otherwise upward to the right global acceptance of the market.
And you mentioned kind of the politics of it, and we are seeing, certainly on the right, a lot of overt support for this, whether it's the Canadian right, or the U.S. right. Is that creating some discomfort in you?
No, actually, not really. I mean, I'm thinking that that's a big part of the right approach that I support. Like, let the markets decide. I texted, knowing I was coming on to see you today, I texted our old friend Pierre, the leader of the opposition.
Oh, you guys are texting buddies.
Well, because I knew he was essentially in support of free market and blockchain and the power of what this can do. And I said, hey, Pierre, going on BNN tomorrow, talking to Amber. He says hi. Where do you stand, right? What's your stance on this? Quote, I'm in favor of a free market where blockchain assets are regulated like their traditional equivalents. If something acts like a security, it should be regulated and taxed like a security. If it acts like a currency, it should be regulated and taxed like a foreign currency, etc. Let the market figure out the rest, right? So, yes, we do need to put the guardrails up and decide what a security is and what a currency is. But I just want to remind you of one thing. It's $1 trillion market as we sit here today. 700 billion of it is tied up in Bitcoin and Ether. Bitcoin is clearly not a security. We worked to manufacture this stuff. It does have utility. And the debate and the game is going to be played around people and companies issuing tokens that have utility versus ones that are purely, launched to speculate on and trade and that don't have a utility. And the easy fix for that one is to just make sure you're an accredited investor if you want to play.
Well, that's
that
tough. No, that is complicated because most of the people playing in crypto right now are not accredited. And in fact, it's supposed to be a democratizing thing where anybody can get access to it. And it's for those people that are unbanked.
Yeah, and that's a good point. So let me walk that back a little bit. I mean, I do think that would be a quick fix and a quick solve, but you're absolutely right. It does go against the democratization and the decentralization. I just think we need better definitions of what's security and what isn't.
And lastly, because I know you've invested in this space, has this changed how you invest, the increased scrutiny that you put on this sector? I know you invest across all kinds of sectors, but has this changed anything for you?
Well, I'm more and more excited about this sector as we go on. So I really see this as a short-term blip. And the part of our operation that actually trades in liquid assets, those guys are excited because in their mind, they've got artificial drags going on Bitcoin and Ether, which is the majority of our position. And they're getting ready to load up for what they think will be an incredible bull run.